All right, welcome to this explainer where we're going to untangle three massive tremors that are shaking the financial world right now. We've got a historic rally in gold, a really sudden chill in crypto, and, the big geopolitical question mark that might just be connecting them all. Okay, let's just dive right in with a number that is, well, it's pretty hard to wrap your head around. Gold, that ancient store of value, has just smashed through a monumental barrier. It's the first asset in history to blow past a $30 trillion market cap. To put that into perspective for you, that's bigger than the entire economy of the United States. This isn't just a small bump, it is a historic milestone, and it's signaling a major shift in where investors are placing their trust. But at the very same time that gold is soaring to new heights, the digital asset world is getting hit with a sudden shock. In just the last hour, $250 million has been completely liquidated from the crypto market. That means a ton of bets got wiped out, forcing this really violent sell-off. It just goes to show you there's extreme nervousness in a space that was, frankly, red hot until very recently. So, on one hand, you've got the oldest asset in the world hitting an all-time high. And on the other, the newest asset class is experiencing a pretty nasty flash crash. I mean, this contrast, it just raises the critical question that we're going to explore today. What in the world is driving this dramatic split? First up, let's unpack the story behind gold's incredible rise, because it's more than just a simple rally, right? There's a really unique psychology at play here that tells us a whole lot about the current market mood. Now, this is where it gets fascinating. This quote is from the billionaire investor Bill Gross, and he's describing gold, one of the most traditional old-school assets on the planet, using these really modern internet-age terms: momentum and meme, a meme asset. This tells us the buying frenzy isn't just driven by the usual fears about inflation. No, it's also being fueled by hype, by speculative energy, a fear of missing out, kind of like what we've seen with cryptocurrencies and meme stocks. And all this momentum, it's just feeding some incredibly bold predictions. Peter Schiff, who's been a longtime gold advocate, is now out there claiming gold has a better shot at hitting $1 million than Bitcoin does. Now, whether you agree with that or not, a statement like that just perfectly captures the kind of feverish optimism that's swirling around this precious metal right now. Okay, let's shift gears and look at the other side of this coin, because a completely different picture is taking shape in the crypto space. While gold is getting talked about in memes and these wild $1 million predictions, the mood in digital assets has turned, well, decidedly sour. So the headline event here is a pretty significant drop in Bitcoin's price. The top crypto just fell below that key psychological level of $105,000. And look, this isn't just a dip. It's a real break in that upward momentum that has put the entire market on high alert. And you can literally see that fear reflected right here in the data. On platforms where people are actually betting money on what's going to happen next, the odds of Bitcoin falling even further have now tipped just over 50%. The market, for all intents and purposes, is now betting on more pain to come. So, what's the big force behind the scenes causing these dramatic opposite moves? Well, one major candidate is all the growing confusion and anxiety around US-China trade relations. And this slide just lays out the core of the uncertainty perfectly. On one hand, you have these official statements trying to calm everyone down, saying we're fine, there's no trade war. But on the other hand, you've got direct threats to escalate tariffs. Investors are being pulled in two different directions, and whenever there's no clarity, anxiety just builds and builds. The crucial point here is that this isn't just political noise. The stakes are incredibly high. The head of the World Trade Organization has warned that if the US and China's economies totally decouple, it could slash global GDP by a staggering 7%. That's not a small number. That's a recession-level threat hanging over the entire global economy. So when you tie it all together, a pretty clear narrative starts to emerge from all this noise. This intense geopolitical uncertainty, it's creating widespread anxiety in the market. And in response, investors seem to be doing that classic flight to safety, pulling their money out of what they see as high-risk assets like crypto and pouring it into the ultimate traditional safe haven, gold. And all of this leaves us with a final, really critical question to think about. As the lines between technology, finance, and geopolitics just keep getting blurrier, the very definition of a safe investment is being put to the test. Is it still the ancient metal? Is it the new digital code? Or maybe something else entirely? Honestly, the answer to that question is probably going to define the next era of finance.